Why you need to get crypto. Let's go, let's go, let's go. Episode 4. Yeah, all you little stock lovers, all that. I'm gonna bring y'all to the dark side real quick. Now, I'm a stock lover. Hey, stocks on top. But today I'm gonna convert y'all. I'm going to convert y'all. I'm gonna bring y'all over to the dark side. Why you need to get crypto. We're gonna break it down. So, you know that the dollar is designed to lose value. And it's not a mistake. And it's the system working exactly as planned. So, I'm going to take y'all back to, all right, how is the dollar losing value? In 1913, the Federal Reserve was created. What's the Federal Reserve? So, the Federal Reserve is actually the entity that prints money. It's not the government. The Federal Reserve and the government, two different things, but they do work together. So, in November 1910, there was a secret meeting in Georgia, Jekyll Island. There's an amazing book. You can either read upon it online, or if you like books, you like reading, there's a great book. It's called The Creature of Jekyll Island, or The Creature from Jekyll Island, something like that. Anyways, so what happened in this meeting was that you had bankers and politicians, representatives from the likes of J.P. Morgan, Rockefeller, and Senator, I don't know, Aldrich or something like that. So they met in private and they drafted a plan. And that plan later became the Federal Reserve Act. So what this did was it gave private banks the power to issue money and collect interest from the US government in perpetuity, indefinitely. But what does all this mean? And how is this even done? So think of the US government just like you and I, right? Or everyday citizens. People need loans. The US government, they don't print money. They need money. Sometimes taxes don't cut it. So, what does the US Treasury do? They issue IOUs. What are IOUs? So, those are the treasury bonds, those are the treasury bills and the notes. Simply, it's the US government saying, here's a certificate that I owe you money. You give me that money, I'll pay you back. And to make the deal sweeter, I'll throw some interest on it. So the large banks like JP Morgan, Goldman Sachs, etc., they buy these treasuries. The government then gets that money and they get to spend it. And usually they'll spend it on things like wars and programs, bailouts, stimulus. So the US government has to pay the interest on those treasuries to whoever holds them. So that's the banks, investors, foreign governments, or even the Fed. But here's the thing, that interest is paid out of federal tax revenue, meaning it's taxpayer funded. So this creates a permanent flow of money from the public to bondholders. So, in short, Treasury prints IOUs, the Fed prints the money, and the taxpayers pay the interest. That's about as simple as I can make that. Now, keep in mind, I think it's very important for us to understand supply and demand. And simply, price moves when demand beats supply. So, If there's a lot of supply, little demand, price goes down. If there's a little bit of something and a lot of people want it, the price is going to go up. Let's continue. For most of modern history, countries back their money with gold reserves. And after World War II, the American dollar was crowned king. This was due to world economic chaos, and America was actually in a pretty good situation. We were pretty stable. So the dollar's pegged to gold at $35 an ounce. And the world just trusts America to keep its word. But then Japan was actually smart. So when they started selling all their cars and all their electronics over to the US, what would they do? They sold their cars, stacked up the bread, the money, they stacked up the money, and they actually traded it for gold. And that was actually hurting us because our reserves were going lower and lower. And it was actually helping the Japanese economy because their gold reserves were going higher and higher. But in the 1960s, we started overspending. We had the Vietnam War and we had welfare programs. So more dollars are printed than the US had gold. And that's when people start getting suspicious. And the first one was the French. So the French actually calls the bluff. They say, hey, whatever y'all got going on over there, this can't be right. Y'all are spending way too much money. I don't think y'all can actually back it up. So what does the French do? They actually send warships to New York and they load up on the American gold. And then the rest of the world's like, we should probably follow lead. So Germany, Japan, and others go to the US and get their gold, which means that our which means that the US reserves shrink. In doing that, now our confidence actually collapses. But President Nixon says, you know what? Let's just take it off the gold. Who's going to stop us? We're a world superpower. So now, gold standard ends. And that leads us to endless money printing, which means that every new dollar makes all the dollars that are already out in supply worth less. We also introduced fractional reserve banking, which is simply that the banks were only legally required to keep 10% of money on hand. The rest was invested or it was loaned out, creating new money as debt. So that's why I heavily advise people to stop saving money in a regular bank account. Stop doing it. More money gets printed, making your dollars worth less. And on top of that, the bank is doing what you should be doing, which is investing that money or at least making money babies. So they're either loaning it out to people and they're collecting interest, or they're making investments on their own through the money that you had to go out and get. Simply like this: you spend your time, your effort, your sweat to go make money. You then take that money and trust it in someone else's hand. They take the money that you went out to work for. They don't even keep all of it. They only have to keep 10% of it. And the rest, they get to do with as they choose, as they please. So that's again why you need to learn to invest. You need to learn to invest. But, anyways, then you have the bailouts, you have wars, you have stimulus, and all this is causing more and more money to be printed, which in result steals your purchasing power year after year after year because of inflation. Now, in the 2008 crash, the banks got bailed out, but something else was born: Bitcoin. And Bitcoin was the first decentralized and digital alternative to fiat. Okay, now this is what makes Bitcoin so amazing. One, you have a fixed supply, meaning nobody can create more, there will never be more, nobody can change this. There's only going to ever be 21 million Bitcoin. That's one. Two, it's borderless and it's permissionless, meaning that there's not a bank or government that can block access to you owning Bitcoin. As long as you have the internet, you can use it, you can buy it, you don't need a bank account or a government approval that's required. The other amazing thing about Bitcoin is that it's verifiable, meaning that every transaction you can publicly see. You can publicly verify it on the blockchain. I'm not going to get into what the blockchain is. But, anyways, basically, there's no secrecy to Bitcoin. Everybody has access to it, everybody can see where it went. But Bitcoin actually had a shift. And it's where it was once meant to be used as currency, as money, and then actually being bought and used as a store of value, which is where we get the term digital gold. But what actually makes Bitcoin go up? And to me, it's two major reasons. One is that adoption is continues to climb, and it's not only from retail investors now, but also institutions and governments, which is huge. The other reason is because the Fed keeps printing money, meaning that the dollars in circulation are worth less and less and less. So simply, people take their dollars, put it into Bitcoin, Bitcoin holds its value, people keep using Bitcoin, making the price go up. Why does it matter? And it's because it's a hedge on inflation, so it protects wealth. It protects all those days that you sweated and you worked and you didn't feel like going to work, but you still did. All those days actually mean something. They actually hold their value. The other reason is because you have clear monetary rules, meaning all that secrecy, all those shady backroom deals, all that's out the window. There's none of that. This is why you need to buy crypto now. Because if you wait until everybody's in, you're you've already missed the opportunity. We know that the dollar is designed to lose value. We know that Bitcoin is designed to hold it. I truly believe that everybody needs to own Bitcoin or at least some crypto. some portion of your portfolio needs to go to crypto. It's new, it's volatile, it's risky, it's not safe for the most part. But if you stick with the big ones, Bitcoin, Ethereum, Solana, XRP, if you stick with the main ones, do not gamble. But and please do your research. But one thing for sure, crypto is here to stay. And crypto is the future. But with all that being said, that's the end episode 4. Thinking out loud. I'll see you next week.